All right, welcome back to Yahoo Finance Live on this Monday morning. We're about 15 minutes away from the first opening bell of this trading week, the first trading week in the month of May. I guess we'll get to that seasonal cliche coming up later on this week. But we have talked a lot on this program about the chip shortage and the impact that it is having across industries and what the visibility looks like to alleviating some of these pressures in the supply chain. Let's take a listen to what we've heard from executives just in the last week.
We are working our supply chains hard. We're working our own internal factories hard because we see a lot of opportunity to beat the guidance that we gave if we're able to drive the supply situation more positively for the year.
The entire industry, all of our partners and all of our all of my peers, certainly AMD, we're working on increasing the overall supply of semiconductor chips, and you're going to see improvements as we go through the next couple of quarters.
It is affecting everyone. Now, we did stock a fair amount of electronic components, so I think we are managing it. We're continuing to support our customers' demand, but we're really putting our supply chain organization through quite a ringer here to keep up with that.
It's not constraining us at this point at all, but if we start to get to a point where we're a couple $100 million more of growth per quarter, it's going to be challenging.
So there you see the CEOs of Intel, AMD, Carrier, and Stanley Black & Decker all talking about how they are seeing the chip shortage. Sozzi, let's start with what we heard from Pat Gelsinger and Lisa Su, CEOs at Intel and AMD, respectively. They're working on trying to actually generate the supply that kind of gets this bottleneck done. But it really sounds like, that's a 2023 story if you listen to those full conversations. And, you go back to what we heard from Jim Lurie there at Stanley Black & Decker. He's saying they're, a couple $100 million away in sales from being supply constrained, which is something that I don't think they've been in quite some time.
No, and the shortage it's not going to end anytime soon. You talk to AMD CEO Lisa Su, you talk to Pat Gelsinger, and I think they are fully acknowledging to investors in the world more broadly, this is not a 6-month issue. To your point, Myles, this situation may not get better until the middle of 2022. And then what does getting better mean? Are they just able to meet the current demand in the marketplace? Are they really able to crank out chips to go above and beyond where likely the tech space is going to be? And where is the tech space going to be? Theoretically, we're all going to start going back into the offices. Enterprise servers and systems are going to need to be upgraded. That means a whole new fresh round of chips. Oh yeah, just as new autos are going to be coming out, electric autos from the major manufacturers. So there's a lot of stuff going on here. And Julie, I will note this too. We were talking about Warren Buffett and inflation on the top of the hour, Buffett calling out high levels of inflation. We're also now seeing significant chip inflation because there's not enough chips to go along. So you're seeing a Stanley Black & Decker, a Carrier, now being forced to raise prices because of this chip shortage.
If I can look a little bit further out, the dynamics that you tend to see in the chip industry is because it's a commodity business, you do see swinging between shortage and oversupply. And so I wonder at what point, be it 2023, all of these companies are building more supply. At what point then are we going to get back to a chip glut instead of a chip shortage and see prices pull way back? Now, maybe the dynamics of the industry have fundamentally changed because, as you say, we're going back to the office. Chips are going in more things than they ever have before. But if history is any guide to what we've seen in the semiconductor industry, at some point, a glut will be back. And I wonder at what point, okay, so if stocks are a 6 to 12 month discounting mechanism, we're not there yet. But I do wonder at what point investors are going to look at all of the CapEx that the chip industry is doing. Are they doing more, constructing more supply, more plants, particularly in the US and in Europe, which is a change from what we've seen over the past few years? And at what point are investors going to start to focus on the possibility that there will be too many chips in the market? I know we're far away from that, but just something to keep in mind at some point on the distant horizon.
I appreciate your forward-looking commentary, Julie. Also want to mention, too, investors should also take a look at, if you're on the Yahoo Finance platform right now and you see these tech stocks, these chip stocks yielding a good bit, they'll pay out dividends. But I think Pat Gelsinger made a very good point last night on 60 Minutes. Intel is going to be repurchasing less shares. They're buying back less stock so they can invest in this capacity. And that's a story I think that is not yet factored into a lot of these chip stocks. Are chip players going to pull back on the buybacks, dividend increases so they could build out this capacity? That's another story that has not been told, but it could be signaled by a lot of chip players moving forward.
Yeah, and I think this whole conversation, and particularly to your point, Julie, about is there a moment in the future when there's too much supply? I mean, it is really fascinating how different the conversation coming out of this recession is than what we discussed coming out of the financial crisis. And just in that commentary, our former colleague Joe Weisenthal, who's at Bloomberg, he wrote something last week about how everything right now is a short squeeze. I think he called it like the short squeeze economy. And that's essentially what we're seeing in the chip space in a way. The chip industry was managed to assume growth would be X forever, which would be, pretty low. Let's call it 2% growth if we want to take the secular stagnation assumption. We have this, hiccups. Let's call it a 6 to 12 week pause or pullback and difficulty within the supply chain. Things can't get back online instantly, and all of a sudden we've got a 3-year shortage of chips. So is it that we are looking at a new growth paradigm, which I think some executives might tell you, or is it that we just assumed growth would be meager forever? We ran right at the absolute minimum limit we needed to fulfill that demand, and even an incremental, a slight uptick in where the economy is headed throws everything into chaos. You look at what's happening with lumber. You look at what's happening across all kinds of real goods. If you want to go to Home Depot and get just about anything, probably not gonna be able to get it, or you're paying a premium for it. And I think it's such an interesting dynamic coming out of this recession when 10, 15, or 12 years ago, everyone was like, well, we're out of recession, but believe me, everything's going to be terrible for a long time. And you know what? That was pretty much right. And it's a very, very different situation that we're seeing on the ground today as we enter the summer of 2021.